Stock investments that pay you forever, building a sustainable income stream. The dream of financial independence often hinges on creating a passive income stream that endures long after retirement. While no investment guarantees forever, strategically selecting dividend-paying stocks can bring you remarkably close to this ideal. Building a portfolio of such stocks allows you to generate a consistent income stream, potentially lasting a lifetime, while also benefiting from potential capital appreciation. However, it's crucial to approach this strategy with careful planning, diversification, and a long-term perspective. This article delves into the world of dividend-paying stocks, exploring how to identify promising candidates, manage risk, and build a robust portfolio designed to pay you dividends forever, or at least for a very long time. Understanding dividend investing. Dividend investing centers around purchasing shares of companies that regularly distribute a portion of their profits to shareholders. This payout, known as a dividend, represents a return on your investment, supplementing your capital gains. Companies with a history of consistent dividend payments are often considered more stable and financially sound, making them attractive to income-seeking investors. The dividend yield, expressed as a percentage, represents the annual dividend per share relative to the stock's price. A higher yield generally suggests a higher payout, but it's essential to consider the underlying company's financial health before solely focusing on yield. A high yield might indicate financial distress, as the company may be forced to pay a high yield as its share price has fallen. Identifying forever stocks. Finding stocks that will reliably pay dividends for decades requires meticulous research. Here are some key characteristics to look for. Strong financial fundamentals. Analyze the company's financial statements, income statement, balance sheet, cash flow statement, to assess its profitability, debt levels, and overall financial health. Look for consistent revenue growth, positive free cash flow, FCF, and a manageable debt-to-equity ratio. Strong fundamentals are crucial for sustaining dividend payments over the long term. Consistent dividend history. Companies with a long track record of paying dividends and increasing them annually, dividend growth stocks, are generally viewed as more reliable. Examine their dividend payment history, looking for consistency and any instances of dividend cuts. A history of increases demonstrates the company's commitment to rewarding shareholders. Sustainable payout ratio. The payout ratio is the percentage of earnings a company pays out as dividends. A sustainable payout ratio typically falls below 70%. A high payout ratio could signal vulnerability to dividend cuts if the company's earnings decline. Industry position. Invest in companies operating in stable and resilient industries less susceptible to significant economic downturns. Utilities, consumer staples, and healthcare often offer more stable dividend streams. Management.